Hello, everyone. Can you guys hear me all right? Okay. I'm gonna. Hopefully you do. Welcome to Market Recap Session 2. In this session, I'll be going over what's happened in the market over December and January. This is Suleiman speaking. I'm one of the co-presidents at the Society, and thank you guys for coming to the session. So let me just jump straight into it. Okay, so I'm going to be covering in this session the current prices of the top 10 coins by market cap, BTC price movements over the last 60 days, changes in total market cap of the entire market, as well as regulations and policy changes. And then the last slide, I will go over some expectations for 2022. Okay, first slide, what you see is the current prices of the top 5 coins by market cap, excluding stable coins, because the price is stable. Right at the top, BTC, the current price as of today is 43,000 US dollars. Over the last 90 days, it's down 31%, and over the last 30 days, it's up 1.1% nearly. ETH, 3,112 US dollars. It's down 32% over the last 90 days and nearly 6% over the last 30 days. BNB is third place. Its current price is nearly 420 US dollars. It's down about 34% over the last 90 days, and it's down nearly 12% over the last 30 days. XRP at 82 cents, down 30%, and up 4.8% over the last 30 days, actually. Cardano at 1.16 US dollars, and it's down 42%, nearly 43% over the last 90 days, which is a lot. And it's down about 7.6% over the last 30 days. So there's been some increase over the last 30 days, but overall a large sell-off in December and early January. The bottom half of the top 10 is Solana, Ava, Luna, Dot, and Doge. At Solana, 106 US dollars. It's down 53% over the last 90 days, which is a lot, and 26% over the last 30 days. Ava and Luna both saw really strong rallies in November, which is why they're still green over the last 90 days, because I believe they saw around 30 more than 30% each increase in price in November, and down 26% over the last 30 days for Luna, and Ava down nearly 6% over the last 30 days. Solana down 26%, and Luna down 30% over the last 30 days. Polkadot down 54% over the last 90 days and 22% over the last 30 days. Doge down 40%, nearly 41% over the last 90 days, and 2.2%, nearly 2.3 over the last 30 days. Okay, on this slide, as you can see, I wanted to focus specifically on BTC because whatever trend that you see for BTC, the other large market cap coins, and in general, the rest of the altcoins will follow the same trend, albeit a lot more aggressively. So if it goes down a lot, they will go down even more, vice versa. So the beginning of December, from December 1st to January 1st, the price went from 56,000 US dollars down to 46,000 US dollars from the 1st of December to the 1st of January. That's a 17% decrease in price. And then from the 1st of January to the 1st of February, it went from 46,000 US dollars to 38,000 US dollars, which is about 18% decrease, as you can see here. And overall, from December to February, so that's over the last 60 days, it saw a 32% decrease in price, although it has seen a strong rally over the last 20 or 25 days. Okay, so who are the winners and the losers over the last 60 days with regards to the top 10 coins? The winners are BTC and XRP, which have seen really strong rallies over the last 20 days, which is why they're some of the only few coins in the top 10 that have actually seen increase in the last 30 days in price. BTC up nearly 1%, let's say, and XRP up almost 5% as well. The losers are Luna and Dot. Luna, at some point, it was down about, I think, 50% or more in early January because it saw a very strong rally all the way to 100 US dollars. So, and it dropped down to, I believe, about around 50 US dollars, and now it's back up to 54. Dot, the other loser over the last 60 days, down 22%. Okay, so those are the winners and the losers for the last 60 days. I wanted to take a quick look at the total market cap of the entire market, which over the last 90 days, from the 15th of November until today, the 11th of February, nearly 1 trillion in liquidity has been lost. So the total market has decreased by 34%, nearly $1 trillion in sells, basically. So in summary, there has been a lot of selling over the last 60 days. So the obvious question is why? Why has there been so much selling over the last 60 days? Well, here are some of the reasons, some of the most pointed out reasons. This list is not exhaustive. There are more reasons as well, but in general, these are, I think, probably the strongest reasons why there was such a large sell-off. Number one being a fear of interest rate hikes. Well, for that, all you have to know is that when central banks raise interest rates, it becomes more costly to borrow money for everybody in the economy. So over time, it will cost more for somebody to pay back money. So there's less incentive to borrow, for less incentive to give out loans. And this means that people want to hold on to cash as they don't want to be borrowing money. That's one reason. Another reason is I'm sure you guys are aware, like tensions in Ukraine. So a general fear of war that's always going to lead to people trying to hold on to, like physical things that they actually can control in case something crazy happens, like the internet shutting down. So in general, people are going to sell assets, digital assets, and hold on to real physical assets like gold and property. Also, a general expectation that prices would go down. In other words, a fear of a bubble. So it's kind of like a self-fulfilling prophecy. If everybody thinks that everybody else is going to sell, then they're going to sell first so they don't lose money. Which is going to lead to like a snowball effect of everybody just selling. And the last reason is sell-off in the equities market. So if you look at all other stocks in general, were basically having a large sell-off in late December, early January. The large index funds as well, Dow Jones and Nasdaq, also saw like significant sell-offs in early January. And of course, the same is going to happen in crypto. It's not invisible to whatever happens in the real world. Crypto is going to reflect it at some point. Okay, so I want to talk a bit about regulations and policy changes that have occurred over the last 60 days. This slide specifically, I want to mention central bank digital currencies, which are more and more becoming something that people talk about. So what are they? Basically, they are stable coins issued and controlled by central banks. There's a lot more to them, and if you want to do some research, I recommend you do that. So China launched its pilot digital yuan on January the 4th, and the digital currency works through a mobile app called eCNY, which is available on Android and Apple. And on the opening ceremony of the Beijing 2022 Winter Olympics, which was the 4th of February, there was reportedly more transactions made in China's central bank digital currency than those that were done through Visa. And Visa is one of the biggest companies when it comes to card transactions in the world. I'm pretty sure everybody has a Visa card. So what does that tell you? It tells you that central banks, digital currency CBDCs, are going to become more and more a thing, and a lot more countries are looking into making some. For example, the European Commission has announced a bill for a digital euro. And if they give the green light for this bill, then the digital euro could be ready for issuance by 2025, which sounds like it's a long time away, but it's really not. The Indian Finance Minister, I'm not going to attempt to say that name, announced the launch of a central bank digital currency by 2022-2023 as a means to boost the country's economic growth. So in general, over the last 20 days, more countries have been considering making CBDCs. And on the tax side and other issues, there's been more regulations and policy changes. The Venezuelan government has approved a new tax bill aiming to collect up to 20% in taxes from cryptocurrency transactions. If you guys, I'm pretty sure you guys are aware that Venezuela is seeing hyperinflation, which means their money is being worth less and less every day. So Venezuelans have been adopting crypto at a really high rate. So the government has decided to actually tax it because there's been so much money going into the space. The Biden administration is expected to issue an order that would make government agencies begin conducting risk analysis on cryptocurrency as a national security threat. In other words, the US government in general sees crypto, or at least regulation-wise, they see it as something to restrict. And what they're trying to do is they're trying to control financial misconduct, so money laundering and scams and pump and dump schemes. They're trying to restrict those and prevent consumers, retail investors from being affected by them before they start adopting, before they start putting into place laws to adopt crypto. They want to restrict those things first, which to me makes a lot of sense. It upsets some people, but to me it makes a lot of sense. You can't really have a legitimate space unless there are some rules in the first place. Okay, also the Japanese government is considering a proposal to make it easier for registered crypto exchanges to list digital assets in local trading markets. So it's apparently really hard for cryptocurrencies to be listed in Japan because the rules are just, it's an extensive screening process. So it takes a lot of time for the coins to be listed, and they're trying to make this easier so that they can see the benefits like in the market, the whole Japanese market, which is like stagnating. Last note, there's been a wave of litigation surrounding copyright in the end. Oh, sorry, can you guys hear me? Something happened with my microphone. There's been a wave of litigation surrounding copyright in the NFT space. For example, Nike sued StockX for selling Nike shoes as NFTs. So basically, there's going to be more litigation surrounding NFTs as they try to figure out what counts as intellectual property when it comes to NFTs. And if you want to learn more about them, we did in our last session, we covered NFTs, and the video is on our YouTube channel. Okay, last slide, the expectations for 2022. These are the main ones, just a summary. Ethereum 2.0 is launching in several phases, with the first upgrade, the Beacon chain, having gone live on December 1st, 2021, which set up upgrades to the network, which means Ethereum is moving from proof of work to proof of stake. And the implications of that are that basically Ethereum is going to become a bit more efficient. Gas fees will go down, and it will become cheaper for people to use the network. And also, there will be continued growth in NFT adoption, crypto gaming, and metaverse projects. And lastly, Web3, there's been more developments to Web3 infrastructure, such as decentralized servers and software. So overall, basically the crypto space, even the niche spaces, are going to keep growing, and as more money and more developers go into it. So yeah, that's it. That's the market recap for December and January. That was just a high level overview, but thank you guys for coming. I appreciate you for coming. And if you have any questions, please let me know. Any questions?
I think there's a question.
Yep. What's the question?
Do you know if I can get ECNY by downloading the app, or is it in China?
That's a really good question. I think right now it's only available to Chinese citizens, but I'm not 100% sure, to be honest. What I recommend, I'm going to do this myself. I recommend you check the App Store or Apple Store, whatever software you have on your phone. Check the store and see if you can download it. I don't think you can. I think it's limited to Chinese citizens. But maybe you can with a VPN. Maybe that's possible, but I'm not sure, to be honest. Sorry about that. Any other questions?
I think that's it.
Okay. Let me check.
Yeah, that's it.
Yes, that's it. Okay. Awesome. Great then. Thanks.